Listen up right now, because what just happened in the last 12 hours could destroy portfolios across America and around the world if you don't pay attention immediately. Iran just dropped a bombshell announcement. The Strait of Hormuz is officially completely open for all commercial shipping. The words every oil trader and investor has been waiting for, and the market reacted exactly how you would expect. Oil prices didn't just fall, they absolutely collapsed overnight. Brent crude and WTI both tumbled between 10 and 13% in a stunning overnight bloodbath that sent shockwaves through every trading floor on the planet. At the same time, global stock markets are exploding higher. S&P 500 futures are surging. European indices are green across the board, and investors are cheering what looks like the end of the latest geopolitical nightmare. Everyone is calling it the relief rally of the year. Peace is here, they're saying. Lower energy prices mean lower inflation and stronger growth. The euphoria is palpable. But here's the shocking truth that smart money already understands, and retail investors are about to learn the hard way. This is not relief. This is the setup for one of the most dangerous market traps we've seen in years. While the mainstream media is busy celebrating the Hormuz reopening and the oil price crash, the institutions and the truly informed investors are doing something completely different. They're panic buying gold and silver at this very moment. Gold is pushing higher, even as oil collapses. Silver is showing even stronger moves as safe haven demand kicks in hard. Why would that be happening if everything is suddenly fine? Because the smart money knows the Hormuz announcement is fragile at best and a complete trap at worst. They remember how quickly these ceasefires can collapse. They know President Trump has kept the U.S. naval blockade on Iranian ports in place. They see the fine print that this open declaration only lasts as long as the current temporary ceasefire holds. And most importantly, they have read the latest warnings coming straight from the IMF just days ago. The International Monetary Fund slashed its global growth forecast for 2026 and laid out clear scenarios where things get much, much worse if oil disruptions return or if inflation rebounds violently. This is not peace. This is the calm before the storm. And while you're watching your stock portfolio look pretty on the screen right now, the real money is quietly moving into gold and silver because they see the writing on the wall. Another violent reversal is coming, and when it hits, it could wipe out months or even years of gains in a matter of days. The question you need to ask yourself right now is brutally simple. Are you going to be one of the investors who gets caught in this trap? Or are you going to do what the smart money is already doing and protect yourself before it's too late? Because the clock is ticking, and this Hormuz shock is only the beginning. Now let's cut through the noise and look at exactly what's happening beneath the surface of this so-called relief rally, because the details paint a terrifying picture that most investors are completely missing. First, the fragile nature of this Hormuz reopening cannot be overstated. Iran announced the strait is open, but this is tied to a temporary ceasefire that could shatter at any moment. President Trump himself confirmed the news but made it crystal clear that the U.S. naval blockade of Iranian ports remains fully in effect until a permanent peace deal is signed. That means one wrong move, one broken agreement, one escalation, and those tankers could be blocked again faster than you can refresh your trading app. Meanwhile, oil didn't just dip, it plunged hard. We're talking double-digit percentage drops in a single session, the kind of move that usually signals either total panic or total relief. But here's where it gets dangerous for your money. This drop is being sold to you as purely positive. Lower oil prices should mean cheaper gas, lower inflation, and better corporate profits, right? That's what Wall Street analysts are pushing right now. But dig deeper and the counter-reality hits like a freight train. The IMF dropped its latest World Economic Outlook just days ago, and it was filled with red flags. They cut the 2026 global growth forecast to 3.1% in the base case, but they also outlined an adverse scenario that drops growth to 2.5%, and a severe scenario that brings the world dangerously close to outright recession at just 2% growth. They warned that if oil supply shocks return, or if the conflict reignites, inflation could spike back above 6% while growth collapses. That's not some distant theoretical risk. That's the exact environment we're sitting in right now with this shaky Hormuz situation. The ceasefire is holding by a thread. Any disruption in the strait, which still handles about 20% of global oil trade, would send prices rocketing higher again and crush economies already struggling with inflation. Look at what the smart money is actually doing while retail investors chase this stock surge. Gold is climbing steadily, even as oil crashes. Silver is performing even stronger, attracting serious buying interest from institutions and hedge funds who are rotating out of risky assets and into proven safe havens. This isn't random. It's a clear signal that the big players see the oil plunge as fake relief, not a fundamental solution. They're worried about the same things you should be: persistent inflation pressures that never really went away, the risk of a sudden return to high oil prices if the ceasefire fails, and the broader global financial instability that has been building for months. Recession fears aren't gone just because oil dropped overnight. If anything, they're growing because this kind of volatility exposes how fragile the entire system remains. Think about your own portfolio for a second. If you bought into the recent stock rally expecting stability, you might be feeling pretty good this morning. But what happens when the next headline hits? What happens when tanker traffic doesn't actually normalize? Or when Iran makes another provocative move? Or when the IMF's worst-case warnings start looking more like reality? The institutions aren't waiting to find out. They're already shifting capital into gold and silver because history shows these metals perform exceptionally well during periods of geopolitical uncertainty and economic fear. Gold has always been the ultimate crisis asset, and silver often amplifies those moves with even greater upside when panic sets in. This build-up phase we're in right now is deceptive. The market wants you to believe the crisis is over, but every serious analyst knows better. The combination of a fragile Hormuz peace, lingering U.S. sanctions pressure, and fresh IMF recession, and inflation warnings creates the perfect storm for a violent reversal. The smart money isn't celebrating, they're preparing. And if you want to protect your hard-earned money from what could come next, you need to understand that this oil crash is not the end of the story. It's just the latest chapter in a much larger crisis that is still unfolding. The tension is rising, the uncertainty is extreme, and the window to position yourself correctly is closing faster than most people realize. Now the real danger hits you straight in the face. Because if this fragile Hormuz situation unravels, we are staring directly into the kind of market meltdown that could wipe out years of your retirement savings in a matter of weeks. Picture this nightmare scenario playing out in real time. The temporary ceasefire collapses overnight. Iran threatens to close the Strait of Hormuz again, or worse, actually does it. Tankers are blocked. Oil supply from one of the most critical choke points in the world gets choked off once more. Suddenly, that 10 to 13% oil crash reverses violently, sending crude prices skyrocketing back toward triple digits or even higher in a panic-driven spike. The IMF already laid out exactly how bad this could get. In their severe scenario, global growth crashes toward 2%, the kind of number that screams recession with a capital R. Inflation, which was supposed to cool with lower oil, instead rebounds hard, potentially shooting above 6% as energy costs explode again. Central banks get trapped. They can't cut rates aggressively because inflation is raging, but they can't hike either without crushing growth even further. The result? A brutal stagflation environment that destroys both stocks and bonds at the same time. This is not fear-mongering. This is the exact risk the world's top institutions are quietly preparing for right now. While the stock market is throwing a party on this fake Hormuz relief, the smart money is flooding into gold and silver because they know history. Every major geopolitical oil shock in the past has eventually led to sharp market corrections, investor panic, and a flight to safety that leaves latecomers devastated. Think about what that means for you as an individual investor. Your 401k, your brokerage account, your crypto holdings. They all look great in this temporary relief rally. But when the next shock hits, the selling pressure could be overwhelming. We've already seen how quickly volatility can spike in this environment. One bad headline about Hormuz tensions flaring up again, and the VIX could explode, triggering margin calls, forced liquidations, and a cascading sell-off that turns a correction into a full-blown crash. Millions of retail investors will be caught completely off guard. They'll watch in horror as their portfolio evaporates while they were still chasing the all-clear signal from the oil plunge. The regret will be massive. Why didn't I protect myself when I had the chance? This is peak panic territory because the conflict between the surface narrative and the underlying reality has never been starker. On the surface, oil is crashing, stocks are rallying, peace is breaking out. Beneath the surface, a fragile ceasefire, persistent U.S. blockade, IMF recession warnings, and smart institutions quietly accumulating gold and silver as the ultimate insurance policy against total market chaos. The investor psychology here is brutal. Fear of missing out on the rally is pushing people deeper into risky assets at the worst possible time. But the real fear, the deep, stomach-churning fear, should be the fear of being exposed when this illusion shatters. Because when it does, it won't be a gentle pullback. It will be fast, violent, and unforgiving. Gold isn't just rising for fun right now. It's rising because sophisticated investors see the writing on the wall. Another oil shock, another inflation surge, another leg down in global growth. Silver, often called poor man's gold, but with industrial leverage, is showing even stronger moves as both a safe haven and a play on eventual recovery in certain sectors. If you still have significant exposure to stocks, crypto, or other high-risk assets without a proper hedge in precious metals, you are playing Russian roulette with your financial future. The Hormuz crisis isn't over, it's simply paused. And when the pause button is released, the damage could be catastrophic for anyone who believed the mainstream story of everything is fine now. This is the moment where fortunes are made or destroyed. The panic is building beneath the calm surface, and only those who act before the explosion will survive with their wealth intact. The clock is ticking louder than ever. But here's the explosive truth that could still save your financial future if you act right now before this Hormuz trap fully springs shut on the rest of the market. While millions of investors are still high on this fake relief rally, cheering the oil crash and the stock surge. Like it's the end of all problems, the smart money has already made its move. They are panic buying gold and silver at this exact moment because they understand one brutal reality that the mainstream media refuses to say out loud. The Hormuz reopening is not the end of the crisis. It is only a temporary pause button on a much larger disaster that is still coming. Gold is climbing higher, even as oil tumbles double digits. Silver is showing even stronger momentum as institutions and hedge funds rotate massive capital into these proven safe havens. Why? Because history does not lie. Every single time geopolitical oil shocks like this have played out, the initial relief rally has been followed by violent reversals that destroyed portfolios that were not protected. The IMF laid it all out just days ago. Their severe scenario shows global growth collapsing toward 2%, inflation spiking over 6%, and the world teetering on the edge of full recession if this fragile ceasefire breaks or if tanker traffic does not actually normalize under the ongoing U.S. naval blockade. That means your stocks, your retirement accounts, your crypto positions that look so strong this morning could get absolutely demolished in the next wave. But gold and silver have always been the ultimate insurance policy during exactly these moments of global financial instability: oil shocks, inflation surges, and recession panic. They are surging right now for one simple reason: they protect wealth when everything else is falling apart. So what does this mean for you as an individual investor who does not want to be one of the thousands who wake up one morning to see their life savings cut in half? It means you still have a narrow window to do what the smart money is already doing. You need to start shifting a meaningful portion of your portfolio into gold and silver immediately. Whether that is physical bullion you can hold in your own hands, trusted ETFs that track the metals, or mining stocks that amplify the upside when panic really kicks in, the time to move is not next week or after the next headline. It is right now while this deceptive calm still exists. Do not wait for the next shocking development. Do not wait until Iran makes another provocative statement, or until the blockade tightens, or until the IMF's worst-case numbers start becoming the daily reality on television. The institutions are not waiting. They are loading up because they see the writing on the wall: another oil shock, another inflation explosion, another leg down in this already unstable global economy. Imagine waking up in a few weeks or months and realizing you were one of the few who actually listened. Your portfolio is not only surviving the coming collapse, it is thriving because you had the foresight to own the only assets that perform when fear takes over the markets. While your friends and family are panicking and selling at the bottom, you will be sitting on the safe haven assets that smart investors have always turned to during times of crisis. This is your moment of power. This is your chance to escape the Hormuz crisis bloodbath that is still coming. The oil plunge gave you a false sense of security, but the smart money knows better, and they are already positioned. Now it is your turn. Do not be the investor who looks back with regret and says, "I wish I had acted when the warning signs were screaming." The window is closing fast. The next headline could hit at any hour, and when it does, the panic will be real and the damage will be swift. Hit that subscribe button right now, turn on notifications, and start preparing your portfolio today because the Hormuz shock is far from over. Gold and silver are your lifeline in this storm. The smart money is already inside the lifeboat. The question is, will you join them before it is too late? This is not financial advice. This is survival strategy in a world that is still on the edge of chaos. Act now or watch everything you have worked for disappear in the next wave of this unfolding crisis. The choice is yours, but the clock is ticking louder than ever.